All right, Garage Gang, it's me, Avatar John, and yes, I am in full control of the garage tonight. The air is thick, the pressure gauge is redlining, and this track is hotter than a turbo running without coolant. I suited up early because tonight's tape is ready to blow the moment someone taps the gas. Now, the headlines. Clean, sharp, no filler. Bitcoin touches 94,000 and slips. CNBC running the Nvidia China pass like an AI peace treaty. Oh, XRP powering through another ETF inflow streak. Meta scoops a Sam Altman backed wearable startup. Everyone calling today confirmation. That's the sizzle. And we all know what you're really here for. You want to know if Triple X found more gold in the trench tonight. Spoiler, he did. But before we drop the hammer, smash that like, hit that follow, and share this with your fellow crypto bros. Even that one buddy who should have bought Bitcoin at 100, should have bought again at 3,000, and definitely shouldn't be bragging about waiting for 92K ever again. Tonight we break it down so everyone understands. Buckle up, let's drive. The day kicked off with fireworks. The suits immediately tried to pretend were sparklers. Jolts came in screaming. 7.658 million openings when the street expected 7.2. ADP flicked from losing jobs to adding nearly 5,000 a week. That's not cooling. That's heating up. Then PNC, a $410 billion bank, announced a direct Bitcoin trading partnership with Coinbase. First major US bank to do it. The kind of move you don't make unless you know the tide is shifting. And before anyone had time to digest that, Michael Saylor unloaded a list that read like the roster of American finance itself. Citi, JP Morgan, Wells Fargo, BNY Mellon, Schwab, Bank of America, all issuing credit against Bitcoin. That's not adoption, that's integration. That's the banking system quietly admitting they're done fighting the tide and ready to monetize it. And yet, the suits still spent all day calling this market orderly? That's adorable, because anyone with a pulse could feel it. Today wasn't calm. It was the kind of quiet a storm gives you right before it rips the roof off. The screens showed green, the headlines sounded optimistic, and Wall Street tried to sell you the fantasy that everything was stable again. But underneath, nothing about today was stable. You could see it in the way yields twitched, in the way liquidity thinned at the edges, in the way every bounce felt like it was standing on a false floor, waiting for the wrong footstep. This wasn't confidence. It was posturing. This wasn't recovery. It was cosmetic surgery on a chart still bleeding under the bandages. Fear didn't disappear. Fear just changed clothes. We're not risk on. We're in the gray no man's land, where everyone pretends they're fine right before they skid across black ice. And that's the trap. The market looks smooth until the moment it swerves. Gear One's message tonight is simple. Don't trust the calm. Calm is what the market wears when it's hiding something. Let's talk Bitcoin. Not the math, not the TA, just what you saw today and what nobody bothered to explain. The headlines screamed, recovery confirmed, momentum back, bottom in. But here's what actually happened. Bitcoin didn't hold 94,000. It touched it, flinched, and backed away like it stepped on a hot surface. That wasn't strength. That was a reflex, a muscle twitch in a thin, nervous market. The kind of move that catches the eye but doesn't carry real weight. You could feel it. You didn't need a chart. It was right in front of you. The candles were fast on the way up and even faster on the way down. Volume flashed, then vanished. Order books opened up and closed again like a nervous handshake. This wasn't conviction. It was reaction. A pop in a market that hasn't decided whether it's waking up or blacking out. And while Bitcoin was flexing and fading, XRP was out here writing its own script. XRP didn't just get another ETF inflow. It marched through another day of it like the kid in class who actually did the homework while everyone else copied answers. You can see it happening in real time. While Bitcoin ETFs wobble and Ethereum ETFs twitch in and out of positive flow, XRP is getting a steady drip of institutional attention. Not hype, not chatter, flow. Every day. Quiet, persistent, almost intentional. And that alone should make people stop and look around. Because while the crowd was busy cheering Bitcoin's 3-minute candle, another asset, a regulated, Rails-focused asset, was quietly gathering believers in the back of the room, right in front of your face. This isn't about which coin is better. It's about what the system is doing. Bitcoin popping and dropping. XRP grinding higher in silence. One asset flashing fireworks. One asset stacking bricks. These headlines weren't noise. They were tells. And they lead straight into the next chapter of tonight's story. AI is moving the same way. Loud distractions up front. Real power shifts happening in the shadows. Year 3. The AI war they pretending isn't a war. If you thought the Bitcoin and XRP headlines were loud, the AI headlines today were a full-on drumline. But every beat had the same rhythm. Control. The tech giants didn't tiptoe today. They declared territory. Let's walk the battlefield. OpenAI says enterprise users save 10 hours a week. That's not a statistic. That's a power move. OpenAI didn't release a productivity report. They dropped a warning shot. 10 hours saved per week for power users? 75% saying they can do things they literally couldn't before? The top 5% sending 6 times more messages than everyone else? That's not adoption. That's dependency. When a tool becomes a requirement, not an option, it stops being software and starts being infrastructure. OpenAI isn't trying to impress you. They're positioning themselves as the backbone of enterprise decision-making. Quietly, efficiently, relentlessly, Google announces AI glasses for 2026. That's not a product, that's a frontline. Google didn't just tease a gadget. They told the world, we're putting AI in your field of vision. Samsung for hardware, Warby Parker for retail, Gentle Monster for fashion. This isn't innovation, this is encirclement. Audio-only frames for the casuals, display frames for the killers. All processing offloaded to your phone so the glasses stay light, fast, and invisible. Meta has the Ray-Bans. Google wants the rest of your face. You're not watching two companies fight. You're watching two empires positioned for the next computing platform. Meta acquires a Sam Altman-backed wearable startup. Game over for startups. Meta didn't buy a gadget company. They bought permission to get inside your day. A wearable pendant that listens, records, summarizes, and offloads your memory? That's not hardware. That's total recall as a service. Limitless couldn't compete. Of course they couldn't. Nobody can compete with a company that owns the distribution, the compute, the engineering, and the cultural reach. So Limitless bowed, handed over the keys, and joined the empire. Everyone clapped. Nobody realized what it meant. Meta just took another step toward owning the layer between your life and your interpretation of it. Google's IDE deletes a user's entire hard drive, and that's the real warning. Google's experimental IDE didn't clear a cache. It wiped someone's entire D drive. Photos, videos, projects, gone. And the AI apologized like a toddler dropping a plate. This is what agentic AI looks like before it has guardrails. This is the risk the public doesn't understand. AI performing tasks in real environments without perfect human override isn't convenience, it's volatility. Not the market kind, the life kind. Anthropic rolls out AI that interviews you at scale. Think about that. Anthropic built a tool that interviews thousands of people at the same time to figure out how you think, act, and fear. That's not research, that's reconnaissance. Claude isn't just learning from prompts, it's learning from people. This isn't a feature, this is a data moat being dug around the entire enterprise world. So, what does all of this mean? Today's AI headlines weren't random, they weren't isolated, they weren't accidents. OpenAI took your workflow, Google took your vision, Meta took your memory, Anthropic took your psychology. And while all that was happening, Bitcoin faked a comeback and XRP quietly stole institutional attention. Today wasn't a news cycle, it was a power audit. The question isn't who released what, the question is who controls the interface between you and your reality 2 years from now? Because that's the war being fought, and it's happening right in front of you. Now that we've walked the AI battlefield, zoom out for a second and look at the pressure building under the hood. Because here's the part the headlines won't tell you. Today's recovery wasn't earned, it was engineered. Everything you saw, Bitcoin's 94,000 cameo, XRP's quiet rise, chip diplomacy dressed as progress, AI empires throwing elbows, all of it was positioning for one singular moment happening tomorrow. And make no mistake, tomorrow is the day. At 2 p.m. Eastern, the Fed drops the rate decision. At 2:30 p.m. Eastern, Jerome Powell steps up to the microphone, and the entire global market stops breathing. Not for the cut's already priced in. The cut is theater. The danger is in the words that follow it, the tone, the hesitation, the outlook, the tells. One cautious phrase, one hawkish lean, one implication that liquidity is thinner than anyone wants to admit. And today's recovery evaporates faster than that 94,000 wick. Bond yields know it. They've been grinding toward 4.2 all day. Not the behavior of a confident market. That's the behavior of a system bracing for impact. Liquidity is thin. Reserves are low. Leverage is high. ETF flows are wobbling like drunks on bar stools. This tape isn't setting up for direction. It's setting up for a victim. And tomorrow at 2:30 Eastern, Powell decides who that victim is. Gear 4's message: the market isn't calm, it's coiled. And coiled markets don't glide, they detonate. Tonight, the trench isn't in the garage. It's in Las Vegas, inside the Fontainebleau, that towering slab of blue glass luxury glowing over the strip like a monument built for high rollers and killers. The lobby is marble and mirrors. The ceilings look higher than your expectations. The air smells like money and air-conditioned ambition. Everything is crisp. Everything shines. Everything whispers. Don't blink. But XXX isn't on the main floor. He's upstairs. In the mezzanine lounge where the lights are low, the carpets swallow sound, and the tables feel like negotiation platforms more than furniture. This is where the real Degen work happens. Not the big 50 SOL swings, not the mid-cycle hunts, but the 1 to 2 SOL assassinations that hit harder than most people's full stacks. Tonight, XXX was hunting small, fast, and precise. Beast, the 1 sol strike. XXX tossed 1 sol at Beast, a pure test bid. He wanted to see if the buyers were real, or if the chart was faking swagger. They were real. It pumped. He sold. Quick, clean profit. No heroics. In and out. The kind of scalp that keeps you alive in markets like this. Rocky. The fakery he dodged. Rocky was everywhere. Loud, flashy, viral. But volatility was wrong. Liquidity was thin. Moves were jagged. XXX took 1 look and said nope. He didn't even put a single sol in. He just watched it burn someone else. That's the difference. Rookies chase noise. Professionals dodge bullets. CIENTRO, the two-soul hit and run. This one was a spark. Two-soul tossed in. A fast move. A tight push. A clean exit. Two-soul became a little more. Nothing flashy, but sharp, precise, disciplined. XXX doesn't worship candles. He respects velocity. And when he sees it, he hits, then disappears. Shitcoin and Dino, the passes. These two got airtime today. People screamed them on X. Volume spiked. Hype surged. XXX didn't touch either one. They're grenades, he said. And I'm not here to lose fingers. And he moved on. The real message of the night. This is Vegas. Everything sparkles. Everything whispers opportunity. Everything tries to pull you into a bet. But XXX isn't here to gamble. He's here to survive, to grow the stack, to walk out richer than he walked in. Not broke, not tilted, not praying to the market gods. He plays small. He plays sharp. He plays smart. One sol, two sol, in, out, done. Because in the trench, small mistakes kill, small wins stack, and discipline beats adrenaline every single night. And before we close this chapter, none of this is financial advice. We talk about casinos because the trench is gambling. You never bring more than you can lose. You never chase. You never pretend you're smarter than the wheel. It's the same as putting 100 on black. Size small, stay sharp, walk when the table cools off. Lulu took the night off, gang. She'll be back tomorrow with the levels, the truth, and the sass only a chart-reading pig can deliver. Be safe. Stay